Good morning, everyone. My name's Mark Boyd. I use the pronouns he and him. It's great to be with you all this morning back at an API Days event in London. It's awesome. I'm the director and founder of Platformable. We support the development of open ecosystems, and we do a lot of research into the data that supports showing where things are at. First of all, I'd like to thank our team who are responsible for a lot of the information and the data and the analysis that I'll be presenting today. We're also hiring. We've got a new analyst role available if anyone's interested. Thanks API Days for letting me do a quick plug there. Okay, 3 key trends as we wrap up the end of 2022. So first of all, globally, there's been a move. Now our global financial digital services infrastructure is really API enabled, and regulations is making that happening. So I'll talk a little bit about that. I'll talk very briefly about the fact that there's this multiple £100,000, £1,000,000, £1,000,000,000,000 opportunities that are untapped because of the emergence of open banking APIs and this digital infrastructure. And then this is now moving towards the embedded finance. We heard from Simon about some of that untapped opportunity as well. And finally, I want to look at some of the challenges in the trends, and that's where the developer experience and user experience are really still being underutilized from what we can see through the data as the secret ingredients for potential fintech success. We at Platformable, we've mapped out what the open banking and open banking and embedded finance ecosystem looks like, and all of the stakeholders. We do this because we want to try to visualize the stakeholders. We want to see how value is generated and distributed to all of the different players. Our most recent addition to the model was adding this distribution channel, which we talked about earlier from Simon, which is about recognizing that there's this new player, the embedded finance, in there as well. So when we're looking at how open banking or embedded finance creates opportunity, we want to see how that is happening for all of the different relationships. So we've been doing this, and we find that it's a great way for us to understand, okay, what metrics do we need to collect to be able to analyze? But our clients are also being able to use this to then identify gaps, new opportunities, work out partnerships, and so on. You can do this at your own ecosystem platform level. You can do this for your country. You can do this for the whole world, as we've done. Okay, we've talked about some definitions already. We've got a great one on embedded finance from Simon. Open banking, there's a range of different definitions. Just very briefly, I want to say open banking enables then APIs, or has been regulated to make APIs available. When there is, and that principally is about payments APIs, account APIs, and in UK, Brazil, Australia, it's also bank product APIs. They're the ones that are mandated by regulations to be opened up. Our take is whenever a bank in a market-driven environment like the US or some areas of Africa, or any bank in themselves, has then seen that API opportunity and is opening up other types of APIs, we classify that as open banking as well in our definition. Others may want to just stick to that payments and accounts, and go for it if that's what you want to do. Okay, so globally, there is over 1,500 bank platforms now. Of course, Europe being the largest because of the Second Payment Services Directive. We expect actually this to be pretty static now for the next 6 months or year. 6 months, let's say, till middle of next year, because the next set of regulations aren't written in stone just yet. Canada just put theirs on hold again for a little while, which they do every 6 months. But globally, the regulations that are in place are there. Banks have come to the party and have set up the API platforms, and so now we expect that next growth spurt to be middle of next year. So the first trend I want to talk about is that regulations create markets and enable innovation. So often as businesses and startups, we see regulations as a deterrent or an obstacle for being able to do anything. Where in fact with open banking, what we've seen is regulations are your friend. They've made a whole new market possible. They've created API aggregators because there was the need then for these sort of standardizing bodies who help act as that black box that Simon described, to be able to enable a fintech to be able to very quickly bring in all bank customers, regardless of which banks
the customers are at. You know, there's and I've got some more examples I'll give in a minute. But so, and around the world, there's like 75 countries, so that's up another 10 over last year as far as the number of countries that have regulations in place. I'm speaking really quickly because there's a ton I want to get through in the next 15 minutes. Also, now we're seeing a new range of regulations that are emerging that are around enabling the embedded finance opportunities. And again, this is happening all over the world. We're making this slide deck and the Q4 quarterly trends report available to all Apidays participants. So if I'm going too fast on one slide, you'll get the whole research pack available as a gift to Apidays participants. So I know you've probably got your own regulations that you like. Everyone got their own list of favourite regulations. Here's 3 that I really like. We won't be able to go into them now, but you can ask me about them in the break and why I'm really bullish on them. If you're working in the UK, there's 3 that you need to be aware of. There's the pensions dashboard, so there's new regulatory guidelines which will encourage all pensions fund owners to make sure that they've got a dashboard that meets certain metrics available. Really interesting model that has digital implications for a lot of us. There's the Open Finance Framework emerging, and then the Environment Act is actually setting some environmental, social and governance metrics in place that financial services need to follow, so things to watch out there. But overall, the problem I see with regulators, even though I'm really strong on regulation is a good thing, at the same time, they're not actually measuring the intended goals that are coming out of the open banking or even the future open finance regulations. So we're in the dark as far as seeing whether the open banking regulations are achieving the sort of value goals that we want to see, that there is greater customer choice, there's increased financial wellness, that there's a new range of players being involved and so on. So we've got a list of of the sort of metrics that we would like to see regulators make available, and then we're collecting it and doing it ourselves using open data and a range of other sources. But it'll be much better if each regulator around the world is doing it. UK does a little bit on API calls. Brazil has a great model. It does 3 or 4 metrics. But still, you know, you can't tell whether or not there is increased consumer choice and whether that's at an affordable level for those for consumers in each country. So my second point is there's a ton of untapped opportunity, and since UK's now gone back to imperial metrics, that's slightly more than 1,000 kilos. Here is the imperial ton, so that's my joke about the imperial metrics. Thank you. Okay, so overall, again, like the API platforms, we're seeing a slowdown in API product growth. Still very healthy here in the top. You can see, you know, okay, so a little bit slowing down in Europe. But the rest of the world, you know, good quarter to, or 25 to 35% growth rate annually in the number of API products that banks are putting out. So the reason why payments and accounts have been the ones that have opened up is because they are the core ones that make a whole range of other services possible. You can do lending if you're able to make your regular payments using a payments API, and you can actually decide who to lend to based on the account information. So all of the, you know, a lot of other services depend on those too. So that makes sense. But there is a whole range. What we're seeing now is that here is the mandated API. So these are the banks and the account APIs, and banks, the payments and account information APIs. And here's what I see as sort of the innovation coming from banks. So this is the areas where banks are deciding to actually invest in creating new API products themselves. Identity, lending, credit, cards, all of the stuff that's needed for banking as a service, loyalty and rewards, and so on. So we're seeing a little bit of that, and that means that fintech and embedded finance players can actually build a more diverse range of products because there are these API products being able to be used as these Lego building blocks that Simon described. Overall, though, we are seeing a third of the current fintech. Again, we created a taxonomy for fintech globally because there isn't an industry-wide one. Our model does match all of the ones that we could find. So if you're aware of another fintech taxonomy, we can show how ours matches yours and goes beyond that if you're interested. There is the need for that sort of stuff to be able to see. Again, this is that shortcoming of the regulations in like this. They say wider consumer choice. What do we even mean by that? There's no one tracking
the sort of consumer choice that we should be expecting in a financial wellness ecosystem. Thanks, I'm going to steal that, I think, Simon. But this one, so overall we see fintech products mostly focused on payments and account information, so financial management, budgeting apps and so on. But this is our model does actually hide some of the diversity that's happening. So for one, there is the aggregator market, of course, which has come up, which is this digital and open banking enablement. But then you can also see, there's a really strong growth here now in data analytics and algorithms type products. One that I won't get to mention later on, but I've got a slide on, is Pinwheel in the US, which looks at HR and payroll data and is then able to provide onboarding services for new employees, linked to insurance opportunities, linked to credit score opportunities and so on. And then there's a few that are in the wealth management space there. What else have we got? And then some lending as well. So we are seeing that sort of diversity start to emerge. And finally then, that is meaning that there are these embedded finance opportunities that are starting to spring up. Simon in the past has talked at API Days about the 3 trillion plus market opportunity insurance. There's pensions, which Ron Khalifa in the FinTech Review said earlier this year was an opportunity for fintech to get involved. And then we've done a study on sustainability, which shows that there are banking APIs that are being used to create sustainability products and services now at the moment. I think there's 2 key characteristics in this embedded finance. First, there's making financial services available at the point of interaction. So some of the examples that Simon showed, the B2B software, it's not necessarily about the point of sale, it's about the point of interaction. When the business is actually engaging with their digital apps, that's when the financial services conversation starts. Others, it's in the point of sale, like at the checkout counter and adding that in. And what I think also with the embedded finance is it's about repackaging the data that a company has around its own customers and then being able to make better use of that to be able to personalize the offer, as well as combine it, as again Simon said with the telco example, where you're then drawing in, looking at characteristics for other people with similar sort of population characteristics or whatever, looking at what they saw as successful for them, can you apply that to your customer and so on. So, these are the trends we're seeing in how embedded finance is sort of coming up. Okay, finally I want to talk about one of the biggest challenges I'm seeing, especially for fintech, and that's the developer experience and user experience. They need to be a fintech's best friends. So I'm really trying to encourage some new thinking in customer-focused service delivery here. Overall, and this isn't one-for-one, so a fintech can be targeting more than one target market, but we see generally they target either individuals or small businesses, more on the small businesses side, which is because there's a little bit less regulation with small businesses. Also, it's good for fintech because it's a bit of more of a reliable revenue stream if you get a small business on board, rather than an individual or household who might try a product for a couple of months and then let it go. What we see is that consumers are ready to use fintech services more and more. Here's a study from Morning Consult from last year, and overall, everyone agrees. So overall, the majority of countries here are showing that there's agreement that there's a lack of innovation in financial services. So people are ready to use embedded finance, fintech a bit more. They're not seeing the sort of products that suit their needs. So. And that mirrors what Anne Bowden said, can you believe it, it was the start of this year from Starling Bank. So in January 2021, there was a public spat between Anne Bowden, who said from the Starling Bank, who said to the Open Banking Committee, there wasn't really a great value emerging from open banking. And then you've got the fintech founders from UK, mostly a group of men in that group who were saying, yes, there is value from open banking. Personally, I think both groups were wrong. as far as how they presented their argument. So no debate points for them. Anne was saying that it was because you can't do account switching easily. I don't see that as one of the key strengths of open banking. In an environment like Chile, for example, that is really important because consumers do regularly change banks to get the better deals. In more established markets, I don't think, or in UK, for example, I don't think that's the big win for open banking. So that's one of the issues she presents as a demonstration of no value. And for the fintech founders, they point to the fact that over 2.5 million open banking payments are now happening a month, which is a weird flex given that in any given month there's 2.97 billion payments. So it's not the brag that you would think it is. The other problem I think that they have is that they're saying that one of the benefits isn't about the customers at all. It's about the fact that, there we go. It's leading to new venture capital investment, and that's the sign. Okay, there is a benefit from new venture capital investment in terms of enabling new employment, growth, and so on. This points to where the lack of the regulations being measured doesn't allow us to be able to talk about the value that's being generated. I've gone on about that too much. While the fintech founders did say that new venture capital investment is a win from open banking, globally fintech investment is down. So it's coming down this year. This is the data from CB Insights. In all areas, the deal average actually it's up in Europe, but for the rest of the world it's coming down as well. So fintech relying on investment from venture capitalists isn't the future, I think, that we should be trying to look for. So what is? First of all, one of the problems is that user experience is mostly focused on bike shedding rather than segmentation. And I think this directly relates to that venture capital investment argument. So venture capitalists are looking for a total addressable market that is huge. Therefore, fintech are being encouraged to actually build a generic product so that they can say this will meet the needs of X million people or billion people. So in fact, what we need to do is actually come back and instead of doing some bike shedding, look more at can we build a reliable business with one segment and then grow from there. Okay, so I've been showing this slide at API Days London for 3 years now. So on the left, you've got the what Monzo were doing. Don't do what Monzo did. When they were unsure what product to develop, they just released a metal card and charged £50 for people to use it. And yes, okay, you get into the prestige and the luxury market with that. I see this in fintech all the time where user accessibility is all about, should the button be green or black, or let's offer a dark mode. They've run out of ideas when they produce a new product that's going to be all black. This is the sort of this is the way to do user segmentation when really when you're trying to just be generic and everything. On the right-hand side, you've got this idea from FCA. They released some ideas of use cases for fintech products. They suggested one on targeting renters, and there's a real clear use case. If you could show, using your account information data, that your regular payment, that you make your payments regularly in previous rental properties or so on, you can use that as a sort of credit score to be able to organise your new rental accommodation. And then the fintech that are working in this space, okay, it's the multi-million opportunity. It's not the billion or trillion opportunity necessarily. But what they're finding is that once they build that stable business, then they can offer mortgage saving products to their customer base. And then they're starting to build out from there. Insurance, home and contents insurance is another one, for example. So they're being able to build out, but you take that road, they're taking that road rather than trying to oversell to get that VC investment. I won't have time to go through these examples. There's a ton in the deck that we make available to you. So, okay, here's that comment. I've already talked about it. So there's two problems with VC investment that I want to quickly point out, if I've got enough time. I'm down to my last minute. So the first is what Alex McCaw, who's a serial API founder, not as prolific necessarily as Mehdi, but certainly has produced a couple of API-enabled successful companies. And he says,
venture financing is actually really for very few businesses. It's really just for those who want to go to IPO. So earlier this year, actually only a month ago, because the newsletter came out yesterday, his new business, it's a notebook app, they did a community funding round. So they asked their customers if they wanted to invest in the business, and they got $630,000 from that. And then they went to friends and everyone on their mailing list and invited. So in 1 month, they raised $1 million US, which gives them enough to then grow and build. So again, not stuck in the venture capitalist model. Then on the right, you've got Snag Tight's an example I've been mentioning again for a couple of years here. Really successful woman-owned business in the UK, couldn't get funding during COVID, so she went back to her customers, said, can you do a buy two, you get one now, you get the other one in November, that'll help us with our cash flow. Customers came to it within 3 days, 1.25 million in the bank. Banks wouldn't offer them, there wasn't really a fintech product that would suit their needs. This is in 2020, So that's, the VC investment, not really suited to the majority of us in the fintech startup sort of world. Second one, they make really bad decisions. So I don't know why we want to go down with VC investment as far as what they decide on. I won't get into the Web3 and metaverse overinvestment and indulgement and all of that sort of stuff, but I'll rant at you for the whole break if you want to talk about that later. But looking at just one example, female-led companies overperform massively over male companies here. Overperformed all male founding teams by 63%, yet they only get less than 12% of the million investment in the UK last year. So, why are we trying to look for VC investment who will then tell us how to run our businesses when they've very clearly shown that they actually don't understand the market and they're going to just invest in people that look like them? Okay, what the problem is then for fintech and for startups like ourselves is the challenge we're trying to solve by looking for that investment is really about cash flow. There's a really great study that came out from Finicity and MasterCard earlier this year that looked at the cash flow problems of businesses. And, Simon mentioned this as well. It's the number one struggle for a lot of businesses. If we can solve that in other ways through alternative financing than looking for VC investment, our fintech will be more viable and sustainable in the long term. And it will be more fun to run a business that is going to be able to focus on customers and grow out from there. So we count 95 active business cash flow fintech providers. Again, we're making that this list fully available to all of the API Days participants, and the link will be in that trends report. I won't have time to mention those. So, trying to move away, look for alternative financing models. Final one, there's not enough business model experimentation. I'm very much like, so this final set of trends was more about, okay, where's the gaps and opportunities? So really making developer experience a fintech superpower. And that's because, there's some studies, this one from Harvard and Stanford that came out earlier this year on the inverted firm, and it showed for every 100 external developers making use of your API, the API provider's market value goes up. So overall, in 2 years, that's 13% increase on the market value of the firm. And it immediately creates opportunities, as we heard, to be embedded into wider value chains. Developer experience, though, is still the opportunity to differentiate as a fintech platform, as a fintech business, where when we measure DX or developer experience as a score out of 15, so do they provide these 15 essential assets from tutorials, open API specification, all of the, whole range of things, getting started guides, authentication guides, and so on. When they do pricing pages and status update pages, when they do that, we're seeing that fintech actually is scoring lower than the banks globally on average at the moment. So fintech could really differentiate on their developer experience. And that means you've got an opportunity then to test products more. You don't have to build everything yourself. All of your external partners can be looking at experimenting and building using your APIs. It also moves you much faster to the embedded finance arena because you're able to sort of start packaging your data and your services so that they can be available on those sorts of platforms that we heard about earlier.
Personally, I don't think we've solved the digital business models opportunity yet. We're not really seeing the diversity in how that revenue is distributed and shared amongst everyone who might be involved in that sort of co-creation process. So finally, it's a real whirlwind tour. There's a whole lot more that we could have gone through. I'd love to talk to you more about in the breaks. So, and to hear and learn from everyone else who's presenting today. And tomorrow. So the three problems then, as far as the trends go, UX focused on bike shedding rather than segmentation. So, identify your user segments and use cases. Startups, we need alternative funding models, alternative financing to try to wean ourselves off this idea that we want to get that, big set of investment and move along that path. And third of all, that start trying to think about how can you build APIs into your products, into your fintech app, and so on, and being able to start leveraging them as products that will lead you to the embedded finance opportunities. Okay, so yeah, principles, we're talking about customer-focused, sustainable growth, and an ecosystem model that you can be a part of. Okay, thanks very much, everyone.